mic audio wasn't being recorded on the recording software. So let's start again. Let's get started with the webinar. Okay, so in today's webinar, we're going to be discussing support and resistance. I'm going to be placing support and resistance on as many pairs as I can. Well, I have 6 pairs selected. I'm going to be placing them on 6 pairs, and I'm pretty sure that's going to go into the 2 hours. So this is going to be a 2-hour webinar. You don't have to stay for the whole webinar. The webinar is going to be recorded. I will be posting the recording to the website, so you don't have to stay here for the whole webinar. We're going to be placing some support resistance on Euro AUD, New Zealand USD, AUD USD, AUD JPY, Euro CAD, and AUD CAD. Now, the reasons I've selected these pairs is because they're not the common pairs. I have support resistance for all the common pairs listed on the website. The page is not up right now, but it'll be up tonight or tomorrow, and I'm going to link you to that page. I don't want to just place the support resistance areas I already have listed. I wanted to place at least some different support and resistance areas live for you guys. That way you guys could see some support resistance areas for different pairs. So I realize these pairs are slightly odd, but all of these pairs have given us trades in the past few weeks in the advanced course, especially Euro AUD. Euro AUD has been really, really good to me in the past few weeks. There's been quite a few trades from this pair that have gone very, very well. So these are all pairs that are actively traded, and we're going to be placing support and resistance on them for the next 2 hours or so. We're probably going to stop placing support and resistance areas in the last half hour of this webinar, actually, because I do want to do some questions and answers. The questions should be support resistance related, though. I'll mention that again when we do questions and answers. You guys can ask questions throughout this webinar, but just keep in mind that I might not answer them. If I'm too concentrated on placing the support resistance areas, I might not see your questions. So please don't be offended if I don't answer your question. Just wait till the end and ask it again. So let's get started. We're going to start off with Euro AUD. Now, I'm going to show you step by step how I place the support resistance areas. If I don't explain anything thoroughly enough, don't worry too much about it, because we are going to be placing support resistance areas on 6 pairs, so I'm sure by the time we get to the last pair, you'll have a pretty good idea of the entire process. So we're going to start with Euro AUD. Now, like I said, I selected Euro AUD because it's been a really good pair to me recently. I think it's given me 3 or 4 trades over the past few weeks. It's by far given me the most trades of any single pair in the past month. So it is a great pair to trade, and let's get started with this. So the very first step, Mido is asking, I'm using MT4 and I have a lot of candles. How do I decrease the amount of candles like Nex? Oh, you just zoom in or zoom out. Anyway, so let's keep going. So the first step, actually I haven't talked about the chart time frame. Right now you guys are looking at a Euro AUD 8-hour chart. Now I realize if you're using MT4 you don't have access to 8-hour charts. 8-hour charts aren't really that hard to get. I mean, you can get 8-hour charts as a demo for MT5. So you just sign up to any broker that has an MT5 demo. Right now I'm using our Parry demo account for this webinar because I don't really use my real account for webinars. You can get 8-hour charts from FXCM, from FXCM's platform, from C-Trader, from NinjaTrader. There's so many platforms that have 8-hour charts these days, or just dedicated charting platforms like ChartIQ, MotiveWave, eSignal, Pro Realtime. There's so many charting platforms that have 8-hour charts. So I realize MT4 doesn't have it, but 8-hour charts are, for me, one of the most efficient makers of pips in my strategy. I mean, 8-hour charts gives me the most trades, and also 6-hour charts, they're really good too. So I place my support resistance based on 8-hour charts, and I trade 4-hour, 6-hour, 8-hour, 12-hour, and daily charts. So we're going to be placing support resistance based on 8-hour charts today. Now, if you're determined to chart with MT4, everything you're learning today is going to still be completely valid. Everything you learn today will be valid. I mean, you can still use the same technique to place support resistance areas with 4-hour charts or with daily charts. The same techniques can be used. I just find that they're a bit more accurate if they're placed on the 8-hour chart. So if you can access 8-hour charts, you should do that. And I've listed all the brokers and dedicated charting platforms that have access to them. So it shouldn't really be that difficult. Yeah, Simon, I know there's no 8-hour candles on MT4. That's what I was just talking about. Okay, guys, it seems like there's a few very basic questions. I'm sure someone can answer Jason's question. I want to get on with the webinar, so I'm just gonna start talking about the placing support and resistance areas. Sorry if that seems rude. I just don't want to spend, 20 minutes, waste 20 minutes answering basic questions about Forex. So I'm sure someone else can answer it. Okay, so let's get started. The very first step when you're placing support and resistance areas on a chart, the first step is to identify bounces. So you just take a look at your chart at what you see right in front of you, which if you're looking at the 8-hour chart, depending on the size of your screen, it doesn't really matter. It's going to be around about a month's worth of data, roughly. So you look at the first month's worth of data, and you place some support resistance areas based on what you see. Now, when you place a support resistance area, what you're looking for is you're looking for bounces that sort of line up. Now, this is called a support resistance area. It's not called a support resistance line. So the bounces don't have to bounce from the exact same line, just from the general area. So, when you first look at this chart, these bounces, they line up. I mean, you just look at these ones and they all seem to be within the same area. So this one is a really obvious one. This one really stands out. So what you do when you see this is you just grab your line tool with whatever charting platform you're using. You throw a line up here. That is your first line. Can someone please explain to Sol that we're already started and that he needs to refresh his browser, because I'm assuming he cannot hear me. So, yeah, you place the first line based on what you see. You see a few bounces here, you place the first line. It's pretty simple. Next, I'm going to place one. Okay, so if we look over here, we see, let me get my drawing tool. Okay, we see a bounce there and a bounce there. We also see when price came down through here, it stalled there for an entire candle. So that's pretty significant too. Then it continued down, then it tried to get back up. And then when it came back up through here, again, it stalled for an entire candle. So, that's not a definitive sign that the support resistance there, but I'm going to place a line there and I'm going to confirm all of these ones later. So right now we're just doing the first step. The first step is identifying recent bounces. Next one. Okay, next one is, sorry guys, I'm having a bit of trouble with my drawing tools. Okay, next one seems to be roughly, we got a pretty big bounce here, but the thing with this bounce is it's probably actually news related. So I'm not too sure. Now, when a bounce is news related, it's not as valid as one of these bounces. For example, this bounce is probably not news related. This bounce here. So this bounce is probably not news related. This one could be, but I'm not sure. This one's could be, I'm not sure. But this one is news related because it happened this week, so I know for sure this was news related. A news related bounce is not as significant. I'm not saying it's completely insignificant. I'm just saying it's not as significant when you're placing support resistance areas, because this bounce didn't really occur because buyers entered the market here because there was support resistance, buyers entered the market because news came out that forced price up. So this isn't as significant, but it still does hold some significance. So I'm going to, if something lines up with this, I'm probably going to place one here. We can see a lot of bounces through here. You can see price came up and then just bounced around, and there was a bounce here. You can see this one, but this one appears to be a bit higher, so I'm not too sure about that one. Might need to pull the chart back after we place it. So I'm just going to throw one up around about here. Yeah, around about there. We're going to drag the chart back, and we're going to confirm that this is actually an area of support resistance. Okay. We can't really see many other bounces right now, based on the 1 month of data we can see here. So we're going to have to pull the chart back a bit and just take a look at this part. Okay, this one looks pretty obvious to me. Bounce there, bounce there. These seem to line up pretty well. So that looks like it might be a support resistance area. Let's throw one up here. Now again, for those of you who are late joining, what we're doing right now is we're placing support resistance areas based on recent bounces. These are not confirmed support resistance areas. We're just placing them based on what we see. We still need to confirm that these are actually real support resistance areas, that they're accurate. Okay, so price is pretty high up here. I'm going to place one more support resistance area. I'm going to place one more because price has pushed up a lot this week because of AUD and USD news. Price has pushed up quite a bit this week, and I want to place another one just in case price keeps moving up, so we have some support resistance areas for further up. I'll place one based on this bounce, and so I placed it based on this bounce here. Now I'm going forward a bit to see if it's actually valid. I mean, it could be valid. Yeah, I'm just going to leave it there for now, and then we're going to confirm all of these. With this one, the support resistance area could also be down here. So price came down to here and bounced away, but we don't have any other bounces that show up here. This one was news related, so it's not as significant. So support resistance could either be here or here. Not really sure which one it is, but I'm going to place them both for now. And when I place two support resistance areas this close together, I just change the color. That way, when I drag my chart back, I can easily identify them, and I remember to check which one of these is the actual support resistance area based on the historical data. So I'm just going to change these to orange. That way, I can keep track of them when I drag the chart back. All right, so let's start with this top one. We're just going to confirm this top one, make sure it is actually support resistance. So this is the second step. The second step is confirming that an area is in fact a support resistance area. What confirm tool? I'm not sure what that question means. If you want to rephrase that, I'm not quite sure what you mean, Gable. What confirm tool confirm you that resistance will not stop the trend? Yeah, I'm not sure what that means, man. If you could rephrase that question, please. Anyway, so we're going to confirm that this one here, 146.65, if you're following along with your own charts, the 146.65, we're going to confirm that this is in fact a support resistance area. So let's just drag the chart back a bit. This bounce doesn't really count in the confirmation process because I placed it based on this bounce. Now the thing is, we don't want to go back too far. I used to take my charts back pretty far when I was confirming support resistance areas, and that was all well and good, a year ago or 2 years ago. But these days, especially recently, I'm not sure if you guys have noticed or have heard about this, but Forex has fallen into a period of extremely low volatility. Volatility has just dropped quite a bit in Forex. It is in fact at 2005, 2006 lows. So we're at the lowest volatility we've seen since 2005, 2006. So what that means in terms of the charts is average daily ranges smaller, prices moving less than it used to a year ago or 2 years ago. So when you drag your charts too far back to confirm support resistance, all right, we're back in 2010 here. So, when you drag your charts too far back, you're going to notice that these support resistance areas don't really seem that valid and that the candles are much, much bigger. So, this is an 8-hour candle that's 180 pips on Euro AUD. This is another one that's 160 pips. This one here is 74 pips. This one here is 80 pips. So if we go back to today, the candles just aren't as big. I mean, this is the size of a small candle today. So a small candle today is roughly 30 pips. One of the larger ones is 90 pips. So this is a large candle today. Remember how I showed you a small candle in 2010 was around about 80 pips? This one's 90 pips, and this is a large candle today. So, price is not moving as much right now as it used to back in 2010. So you can't drag your charts too far back to confirm these support resistance areas. You just can't. Because when you drag them back to 2010, you're just not going to see anything that really confirms the support resistance areas. Okay, this was 2010. Yeah. Candles are just going to be too big. They just carve through these support resistance areas as if they're nothing. Because back in 2010, placing support resistance areas on this chart, they would have been much, much wider apart. For example, you might have had a support area here and then another one up here. So the point I'm trying to make is you don't want to drag them back too far. You want to stick to recent data, and recent data is always the most important. That is the key thing to remember about placing support resistance areas, and it's the thing people most often forget. Recent data is the most important. This bounce here is more important than this bounce here. This bounce here is more important than this bounce here. This bounce is more important than this bounce. So recent data is always more important. The fresher the data, the more significant it is in the placement of support resistance areas. So yeah, let's go back and confirm this one. Now I pulled the chart back, and there's not really much data for this one. This 146.65. When we pull the chart back, we come back to November 2013, and price just went straight through it, but that's okay because price does go straight through support resistance areas sometimes. September, okay, yeah, there's not really much there. We don't really have that much data to go on. I mean, we can see that price seems to slow down as it reaches this support area, but we can't really base this one on much. So we can only base this on what we've seen, the most recent bounces. So we're basing it on this bounce here, this bounce here, this bounce here, which is what prompted us to place it. So there's not much data, but we're going to place this support resistance area anyway because it does have a few recent bounces. And as I said, recent data is always the most important. So does anyone have any questions so far relating directly to support resistance? Not questions about, how do I open an order on MT4, just directly about what we're talking about right now. If everyone watching the recording is wondering why I'm going silent, I'm just reading the questions. Okay, that's a good question. Tom, do you play support resistance areas on candle close, or doesn't it matter? It doesn't really matter. I prefer to base my support resistance areas on the close of the candle. So I prefer to base it on the close of the candle as opposed to the wick. Because when you're placing support and resistance areas, what this area actually is, so what this area I've placed is, it's an area in which buyers or sellers are grouped. If price is above it, then there are buyers grouped in this area. If price is below it, then there are sellers grouped in this area. So when buyers approach this area, so from here, when buyers push up and approach this area, they come through this area and sellers start selling and they push price down. So you want to place your support resistance area at or around the bodies, because the bodies are what is significant. The wicks, they're just showing that buyers are pushing up through this area, but sellers are fighting them. So sellers are fighting against the buyers and they're pulling them back down. But the bodies, they're the more significant part, because that's where you see the buying and selling happening. That's where you see sellers opened up here and they push price down. So always try to aim for the bodies. The wicks are not as significant. Kate, how do you handle market new highs, etc.? That's a good question. We'll talk about that a little later, because I'm pretty sure there's going to be some pairs coming up that are at new highs, and that's going to be a bit of a challenge for placing support resistance areas. So we'll talk about that later. If there are none of those pairs, please remember your question for the end of the webinar, and we'll discuss it towards the end of the webinar, because that is important, but I don't want to get into it now because it's a bit of a broad subject, and I don't want to spend the next 30 minutes talking about it. All right, I'm not going to answer any more questions for now. I'm just going to keep going because we are 23 minutes into this webinar and we've only covered one pair, so we kind of have to get a move on if we want to finish. So let's confirm the one below it. Let's confirm this support resistance area here. That is the 145.90. We're just going to confirm that this is in fact an area of resistance. Now, the first bounce is here. This one, we placed it based on this one, so we're not really going to count that in the confirmation process. Let's pull chart back a bit. All right, last time it came through here, it kind of stopped right on top of this area. But, that's not overly significant. It is somewhat significant because price could have stopped anywhere. It could have pushed straight up to here. It could have reversed from here. But it pushed up and it stopped right on top of our support resistance area. So, that's a sign that when buyers reached this area, sellers started fighting back. Sellers tried to enter price. They didn't to enter the market. They didn't succeed. Obviously, buyers kept pushing up, but sellers tried to fight back around here. And if you drop down to a 1 hour chart, you're going to see probably a string of small candles around about here, and that indicates that sellers are fighting for control of price. So that is a little bit significant, but it's not overly significant. Ooh, okay. So this is back in 2013. August 2013, we do have pretty nice bounce here and some bounces through here. So yeah, that kind of confirms this area in my mind. So in the last year or so, when prices come through here, we've seen some pretty clear bounces. I mean, price bounced here, price bounced here. Again, as it came up through here, it stopped exactly on our support resistance area, so that's a good sign. Then move forward, move forward. Yeah, this one we talked about. So yeah, and then you have obviously the bounces that we placed it based on those two. So this confirms this in my mind. This is a good support resistance area. We're going to throw this one up. Uh, that is a good question. What do the dashed lines mean? The dashed lines, really, they are just there to kind of mark out that it's an area and not a line. Now, the thing about these dashed lines is you don't really need them. They don't need to be there because you know that this is a support resistance area. When you place this line, you know it's a support resistance area. And you know that price isn't always going to bounce precisely from the line, but if it bounces from around this area within, let's say, 10, 15 pips of either side of this area, it's bouncing from that support resistance area. It's a valid bounce. Now, I place these lines around it just because it looks a lot better for me. So you don't have to do it if you don't want to. But for me, it looks a lot better. I like having those lines around it. It marks it as an area, and it's a lot clearer to see the actual bounces. If you don't have those lines, it's harder to see the bounces from the area. It's just not as clear. So you don't have to place these lines. It's just a visual aid, let's say, for me, and it's something I like doing. Okay, so this one here. This one doesn't need much confirmation. I mean, this one has been very, very strong recently. So, as I said, recent data is always the most important. So we've got 4 extremely strong bounces recently. So these 4 bounces are really strong. That's very strong recent data, confirming that this is a support resistance area. Now we could pull the chart back a bit and just check what happened last few times it went through here. I mean, we have a few wick bounces there. This is back in 2013. We have a few wick bounces there. As I said, wick bounces aren't as significant, but we do have a few wick bounces there, so they are somewhat significant. We have some pretty strong body bounces through here. So, again, this is just showing that this support resistance area is significant. Every time price passes through here, it reacts. I don't know how much further we're going to pull it back. Yeah, because if you go any further than this, you're going back to 2010 because it wasn't up here. It didn't move up into these highs until recently. So we don't really have much data to go on. But the data we do have strongly supports this this support resistance area. This stuff here doesn't. But this is going back to kind of mid 2013, August 2013, and support resistance areas, they can move with time. They can migrate with time. They can move down and up 10, 20 pips. So recent data is always the most important. Because this small cluster of data here back in August, a year ago, doesn't support it, it doesn't mean much as long as the most recent data is supporting it. The most recent data is supporting it. So that's the important part. So we have 4 recent bounces. To me, that is more than significant enough. And I did actually take a trade from this support resistance area recently. I took a short here. I did a live trade video. I haven't put it on my blog yet. I probably will sometime soon. So I took a short here from this bounce. Ended up being quite a good trade. So I had the support resistance area placed before these 2 bounces because of these 2 bounces here. And when this bounce occurred, I took a short here. So this was a good trade. The reason I'm bringing this up about the trade, it's not like I'm bragging saying, "Oh, I took a trade here." The point I'm trying to make is that this is a good support resistance area because there was in fact a trade taken from it. So that goes further to confirm that this is a good support resistance area. It is a strong support resistance area. When buyers come up into this area, sellers push against them and they push price down. I know that didn't happen this week, but keep in mind that this was some very, very strong news-based movement. AUD reports and USD reports, they pushed this up all week. So it completely ignored this resistance area this week. And also, resistance areas aren't always going to stop price. It's not always going to stop price. Sometimes sellers just aren't strong enough to counter the buyers. And that's what happened here. Sellers weren't strong enough. That doesn't mean that this is not a good area of resistance. Still a very strong area of resistance, and now that price is above it, this is going to act as a strong area of support. And I will be buying. I will be going long if indecision forms on top of this area. Andrea, good question. How much space do you leave between one support resistance area and another? That is a very, very important question. Now, it used to be around about 80 to 100 pips. That used to be the average space between support resistance areas on most pairs. But as I mentioned, volatility is dropping significantly these days. Volatility is at 2005, 2006 lows. So now it just doesn't make sense to have support resistance areas 80 to 100 pips apart because price just isn't moving enough to cover those kinds of ranges. So now support resistance areas are much closer together. So you got 65 pips. Some pairs, they're 40 pips apart. I think there's one on AUD USD we were looking at that was 30 pips away from another. Now, that is very, very close. But, the point I want to make here, you cannot skip a support resistance area because you feel it is too close. So you can't say to yourself, wow, this looks too close to this one. I'm just going to totally ignore all these bounces here. I'm going to pretend they're not there because it's too close. You can't do that. It just doesn't work that way. Support resistance is support resistance. Buyers are going to react here. No matter if you have this area placed, they're still going to react here. When buyers come to here, sellers are going to enter the market, and they're going to push price down. If you don't have that support resistance area, it's still going to happen. So even if it's close together, you should just have it on your chart anyway, because price is probably going to react there. One sec, guys. Okay, cool. Thanks for that link, Mito. That's Mito just linked something that shows what I'm talking about in terms of Forex volatility being at lows that we haven't seen since early 2007, 2006. So thanks for that link. For anyone who doesn't know that, you should have a read of that, probably after the webinar, just so you understand what's going on with the Forex market. Volatility is at lows that we haven't seen for 8 years. It's not a big deal. I mean, there's still plenty of trading to be done. Just it is going to have a bit of an impact on our support resistance areas and on how much we're targeting per trade. Anyway, so let's move on. We're at 30 minutes and we've covered one pair. This is horrible, horrible, horrible. I wanted to do 6 tonight. Okay, so we have this one here, the 144.50, let's call it. Now this one has a few recent bounces, looks pretty good. Okay, so last time it was here, check that out. Those are some really nice bounces. You got a bunch of body bounces. It came up, reversed, came up again, reversed. So, those are all really, really good. That is not significant at all because that's the open of a week. So, yeah, that's not significant. You got some body / wick bounces here. This is going back to August again. Yeah, let's not bother too much with that. I mean, they do support it, but going back a year, back then volatility was higher than it is now. So I'm going to confirm this because when I place these areas around it and I drag it back, you'll see these bounces. They look really nice from it. You'll see these wick bounces here. Price kind of stalled there. Some wick bounces there. Wick bounces here. So yeah, I'm going to confirm this one. This is a good one. Now's the tricky part. These two, we're not quite sure where to place it. Recent data would probably suggest to go with this here. But we also got a bounce here. So I just want to drag the chart back and see how price reacted the last few times it's gone through here, just to get a clearer picture of where the support resistance area actually is. We can see some clear signs of bodies forming along this area. You can see price broke down and then came back up, and then the bodies formed along that area. You can see price went up, came down, bodies formed along that area. Pushed up, bodies formed along that area. I'm going to go with the one above it. We'll go back a bit further. Pretty strong body bounce here. There's also a strong body bounce there. But the recent data is leaning towards this one here, the one above. And we can always correct this. That's step 3, monitoring and correcting your support resistance areas. So if this one is wrong, okay, based on what we've placed it today, I don't think it is, but if this one is wrong, let's say, and there is in fact not support here, the support is lower, the support is down here. Next time price moves down to here, so let's say price moves down to here, bounces from there, comes down, and it bounces from here, indecision forms on top of here, the bodies form along this line, then you know that you have to pull this area down. So don't worry too much about the area not being placed perfectly the first time. You know, when you place these, you know, your first step is to place them based on what you see. Second step is to drag your charts back a bit, look to the left a bit, see what you see if there are recent bounces there. Once you confirm there are recent bounces, then is the slightly longer process of confirming through live trading and through forward testing that they are in fact good support resistance areas. That can sound kind of scary, but it is in fact pretty easy. I'm not going to cover my strategy today. I see a lot of people are asking about how I enter these trades. I've covered that so much in the past few webinars. I mean, I've done a free webinar series covering my strategy. You know, there's 4.5 hours of video on it for those webinars. That was free webinars over the course of 3 days. You know, I'm going to link you guys to that. So I'm not going to be talking about how I enter these trades because I've covered that a lot. The information is out there for free. So, you know, I'll link you guys to that later. Please don't ask about how I do take these trades because that's not the subject of today's webinar. Today, we're looking purely at placing support resistance areas. I don't want to spend time talking about how to enter trades because it's just going to take way too long. So we've placed support resistance areas for Euro AUD. We have some pretty strong support resistance areas, and you know, these are all valid support resistance areas. They have all actually, well, not all, but a lot of these support resistance areas have given me trades recently. This one here, I took a trade here. I jumped in long. Now, the trade didn't go that well. I was able to close out my first target with around about 30 pips profit, but I was looking to get out up here. So the trade didn't go that well. But, you know, that's not the point. The point is I took a trade from here, and what I was hoping for when I jumped in, wait, let me highlight it for you guys. What I was hoping for when I jumped in here was counting on buyers entering the market, pushing price up all the way to here. Now, what happened instead was buyers entered the market. They pushed price up, but they only pushed up to here. So I was able to close out my first target, but my second target, which was up here, never got hit. I actually ended up closing out both targets around this area. So, you know, these are all good support resistance areas, all valid, and these two at least on this chart have given us trades recently in the advanced course. I took trades from this one and this one, and some other members took a trade from this one, so this support resistance area down here. So again, these are all good, strong, valid support resistance areas. I'm just going to read the questions real quick. Nia, how many bounces count as a reliable support resistance area? I'd say 2 to 3 bounces. 2 to 3 very, very recent bounces. So 2 to 3 bounces in the last month would count as a good support resistance area. But if you had a bounce, okay, if you have one bounce this month, and then you have to go back 2 years to find the previous bounce from that level, that's not a good support resistance area. If we're doing 2 to 3 bounces, it has to be recent. How many pips do I target? Again, we are not talking about my strategy, we're talking about placing support resistance areas. Let's move on to the next pair because we're way behind. We were supposed to have 2 pairs done by now. We're way, way, way behind. So I doubt we're going to get all 6 pairs done, but that's cool. I mean, we don't have to get all 6 of them done. So we're looking at New Zealand USD 8-hour chart right now. Now, hopefully we get through this one faster because I've already explained the basics. So first thing you do is you throw your lineup at the most recent bounces. So I threw a lineup here because of this bounce, and there's lots of bodies forming along there. It looks like a pretty decent resistance area to me at the moment. Check that out. Strong bounce, really strong bounce. And we have 2 bounces there. These kind of line up. Actually, maybe not. Maybe it lines up with this bounce. But still, support resistance area. So this bounce may also be valid. So I'm going to place one around about here. No, there. Okay. I think a trade was actually taken from around here recently. A long trade. I don't think I entered that one though. I think that was entered by someone else in the course. But yeah, that looks like a pretty decent line. You got bounces here, but it is kind of a wide area because the bodies of these ones up here, then the body of this one is down here. So not too sure about that one, but we'll confirm it. We'll see if it's a good support resistance area. Okay. This one's a bit tricky because it could also be here. We're going to do what we did with the last ones. I'm just going to make these ones orange. And when we drag the chart back, we'll confirm where this actually is. Okay. We can't see where to place it, where to place the next support resistance area based on this data here. So we have to pull the chart back a bit. Yeah, I'm thinking around about here because you got a bounce there. You can see the bodies forming along here. Price stalled here at the end of the week. Yeah, around about here. Seems pretty good. Alright. Next one. I have to go back even a bit further. Alright, so. Damn it. No. Sorry, I accidentally deleted the lines. Alright, it's cool. They're back. Okay. It's a little tougher with this one because we haven't got much recent data. But if you look, yeah, there's quite a few bounces. Okay, let me tell you what I'm thinking. So we got bounce there, got bodies forming along here, price came down to here, stalled, and it formed along there. So that's all good signs for this one here. All right, and now as we pull it back further, we also see some bodies forming along here. So that's a good sign. We see a strong bounce there. Yeah, okay. I'm gonna place this one. You can see that this one is trickier than the last one, where we haven't got as much data to go on up front here, so it's a little bit trickier to place support resistance areas on this one, but I think this is actually a pretty strong one. Let's start with the bottom. Let's just confirm this one, because pretty sure this is a support resistance area anyway. So this is the second part of the process. We're going to confirm these support resistance areas now. Chris, you want me to read out the numbers? We got 0.8560, 0.8620. These ones we're not sure about. We're going to have to confirm these. 0.8660 through to 8680. This one is 0.8730 and this one is 0.8780. No problem. Jason Hurst, what are the sizes and fullness of the candles contributing to our decisions to place support resistance? Not quite sure what you mean. I mean, all the candles contribute to our placement. There's no limit on size or average size of a candle that contributes to the placement of support resistance areas. I'm not quite sure what you mean by that question. Anyway, let's confirm the 8560. We've already kind of confirmed it. You know, we got this bounce here, all that stuff through there. We've already seen all this bounce there, bounce there. Okay, so we haven't seen this, but this looks somewhat significant. Now that's a really strong bearish move. So sellers are in complete control of price through here. Sellers are in complete control of price until they hit here. Then buyers enter the market. So that is a strong sign that this is a good support area. Price came straight through it, but when it came back up, you can see it stalled along there. Some wick bounces there too that I didn't point out. Okay, we got some body bounces along here. But, you know, that's going back a fair way. Based on recent data, I would say that this is a pretty strong support resistance area, the 8560. And I am happy to confirm this. This is a good support resistance area. Okay, let's check the 8620 level that we have up here, 8615. Alright, so we got some strong bounces through here, but we placed this based on these bounces, so we can't really count them. Strong bounce through there, but that's probably news based, so I'm not overly impressed by that one. Ooh, check that out. That might have actually been a decent trade here. Probably on a higher time frame though. And last time. Wait, where are we now? We're back in 2000. Still 2013. That's not that bad. But we're going all the way back to 2011. You know, like I was saying, volatility in 2011 was higher than it is now. So these support resistance areas aren't going to look as good back then, but we do see some bounces from it. We see price stalling here. But you know, this data isn't really that valid because current market conditions are much different to what they were in 2011. But based on the recent data, I mean, this has enough bounces. It has some pretty strong bounces, so I'm going to go ahead and confirm this as a valid area of support and resistance. Stephen from Manchester, do you redraw support resistance areas at the start of each trading day? Definitely not. These support resistance areas are valid. I mean, theoretically, they're valid forever. But they are going to move with time, and you're going to have to move them. And of course, if volatility picks back up, these support resistance areas will spread out again. They won't be as closely packed together as they are now. But I certainly don't redraw them at the start of every trading day. These are drawn once and then they stay on your chart. Alright, we're going to confirm where the support resistance area is for these two. And Jason, you're asking about the candle size contributing to what support resistance areas. Um, I realize that some candles are small, some candles are big, but the size of the candle doesn't really matter. What matters is price bouncing from this area. So when price comes up to here, we see clear signs of price being rejected from this area. It doesn't matter the size of the candle. Generally speaking, on top of the support resistance area, you're going to find smaller candles because price is struggling. Buyers and sellers are struggling for control of price, and you don't get these large candles commonly because that indicates that buyers are in full control of price. So, your question really has no answer, but because every candle contributes to a support resistance area. This large candle contributes to a support resistance area because it's heading into the support resistance area. The candles that form on top of it, they contribute to the support resistance area because they're showing buyers and sellers struggling. Stephen, how wide is the area? Usually about 20 pips wide. Depends on the time frame too. Sorry, it depends on the pair. New Zealand USD is a relatively slow-moving pair, so you got about 10 to 15 on New Zealand USD. But you're usually looking to place the outer areas around about 10 pips to either side of the center line. Anyway, let's confirm this one here. Okay. We got a pretty strong body bounce here. Got some bodies forming along here. Yeah, this one is a kind of support resistance area where it's kind of unclear. Price gets messy when it comes to this area. Let's go back just a bit further. Ooh, that's a very strong bounce there, though. Check that out. But regardless, price is a little messy when it comes through to this area. The area, let's say, is kind of wider than the others. So what I'm going to do with this one is I'm just going to go ahead, place it around about here. I'm just going to place the lines slightly further apart. That just indicates to me, it reminds me, next time I'm looking, that this support resistance area is a bit wider. Price kind of gets, it tends to get stuck on top of the support resistance area. And when price gets here, it might bounce from, 20 pips away from the center line. So I just make it a tiny bit wider just to remind myself that this is a pretty wide support resistance area. So let's just drag the chart back and check this out. You can see now that we've made it wider, you can see clearly how price is reacting as it comes through here. Boom. And you can see that it covers a lot of these recent bounces. And this is going back too far. This is going back to 2011, so let's not bother with that. Okay, so we have this one placed. Now this one, I mean, it has a lot of recent data. I mean, it has some really strong bounces. So this one, I'm probably just going to say I'm just going to place it based on this stuff here, based on what we're seeing. I'm not too concerned on the past data with this one because the recent data is very, very strong. And we haven't really got much past data for this, to be honest. This is back in 2011. So last time price was through here was in 2011. I guess this goes back to Kate's question. The question you were asking, Kate, was what do we do when we don't have, when price is entering new highs, record highs, or just highs that we haven't seen in a very long time? When that happens, what you have to do is you just have to let price move through that area for a bit, and then it becomes clear where your support resistance areas are. So this one, we don't have much data to go on, but we can see that the recent data is really, really strong. The recent data is quite strong for this one. we see several bounces. We see 4 strong bounces. Damn it. Okay, that's better. We see 4 strong bounces recently, so this area is quite strong, and we can place it based solely on recent data because we don't have any data to go on if we pull the chart back. If you guys are wondering why I'm silent, I'm just reading the questions. I'm not sure how to pronounce your name. Sizzliard. You're typing private to presenter. You're not typing your question in the public chat, so no one can see it. So could you please, in the bottom left-hand corner of this chat room, hit the drop-down list and make sure it says send to everyone, not send to presenters. JT, that is a good question. Nick, do you play support resistance areas on the time frame that you want to take the trade on or a higher time frame? And also, which support resistance areas are more important, as in weekly support resistance areas more important than daily? Okay, so the support resistance areas I place on my 8-hour chart, I tend to use them for trading anything between the 4-hour to the 8-hour, sometimes the 12-hour. I've started placing some slightly different support resistance areas on my daily chart. On the daily chart, a lot of the weaker support resistance areas that you see on the 8-hour chart, they don't show up on the daily because on the daily they tend to be minor support resistance. I don't worry about them as much. So these are valid for anywhere between 4-hour to 8-hour, sometimes even 12-hour, but 12-hour is getting a bit to the high side for these support resistance areas. You're using the exact same techniques to place your support resistance areas on the daily chart though. The technique is the same, the way you place them is the same. Do I ever use trend lines? No, I don't use trend lines. I don't feel the need for trend lines. They've just never been a large part of my trading. I'm not saying trend lines are not useful. They are useful. I just don't use them in my strategy particularly. Some people in the advanced course do use trend lines in conjunction with my base strategy. So the strategy I have, the price action strategy, they add stuff to it like trend lines, and they use trend lines in conjunction with these support resistance areas, and they work just fine. So they'll place a trend line up here. I know this is a sloppily placed trend line, but I'm just giving you an idea. So you place a trend line up here, and you see this candle forming on here, so that's a pretty strong sign that price is going to reverse, which it did in fact reverse. You can use trend lines in conjunction, but I personally don't do it. I just don't feel a need to. Simon, that is a really basic Forex question. What are pivots? I don't use pivots. You could just Google that and find out. Okay, wait. Let's just confirm this one. Sorry, guys. If you feel that's rude, I'm sorry, but this webinar is about support resistance placement. It's not about basic questions like, what is a pip? What are pivot points? Wow, we're going back to 2006. There's no reason to go back to 2006. That's just going back way too far. Okay, so this line up here, the 8780, I'm just going to double check this. We literally have no data for this one except for the recent data and then this bounce up here. To get any other data for this pair, for this line, you're going back to Oh, never mind, I was wrong. We do have a bounce 2011, so let's check that one out. In 2011, it kind of broke above it, but again, price was moving a lot more in 2011, so this isn't really that valid. And before 2011, we have almost nothing. Yeah. So New Zealand USD is essentially right now at highs that it rarely sees. You don't commonly see these highs in New Zealand USD, which means that it's kind of tougher to place support resistance areas. It's a lot harder to place support resistance areas when you really have no data to place them on. But you know, recent data is the most important. That's what I said from the start. Recent data is the most important. That's something you have to drill into your head if you're placing support resistance areas. Based on recent data, this is a pretty strong support resistance area. Let's go back to 2011 for that bounce. Yeah. So we see in 2011 it came up, and then when it came back down, it kind of stalled here. But overall, this isn't too significant because it's all the way back in 2011. Price was moving differently back then. Right now, the most important data we can see is these two recent bounces. And they are pretty strong because, as you can see, price pushed away, came back up, pushed away again, came back up, pushed away, came back up, and pushed away recently. So we do see some clear signs of resistance up here. It's clear that there are sellers grouped up here and that sellers are fighting buyers every time they reach up here. Simon, there's many different forms of support resistance areas. Pivots are, as Meadow is saying, theoretical support resistance areas. They're based on a mathematical formula. There is absolutely no skill required to placing pivots. You just insert a few numbers into a pivot point calculator and it spits out the pivots for you. A lot of broker platforms these days just throw pivots on your chart when you ask them to. You just hit a button and all the pivots get placed on your chart. They do have some significance, but I prefer to place my own support resistance areas based on strong bounces I see because I feel they are much more valid, and I've been using them for 10 years and they've always worked well for me. So we do have support resistance areas for New Zealand USD now. They're all pretty good support resistance areas. I don't think I've taken a trade on New Zealand USD recently myself. Advanced course members have taken this trade here, so this reversal here. Price came down to here, indecision formed, a long was taken, but I don't think I've personally taken any trades on New Zealand USD. So the only line that's the only support area that's been tested recently and has led to a successful trade is this one here. But that doesn't matter. I mean, it's clear that all these other ones are valid. They're all valid. James, do I use trend analysis to determine whether you trade long or short? I'm not sure what trend analysis is. A lot of terms in Forex are coined by I've got my own terms for reversal candles. I call reversal candles indecision because I don't like the term reversal candle because when a reversal candle forms on top of a support resistance area like this one, it doesn't necessarily indicate that there's a reversal is going to happen. It indicates that price is undecided. So I'm guessing that trend analysis term is something you picked up somewhere. But I'm not really familiar with that term. If you mean, do I read my candles to decide whether to go long or short, then yes, definitely. By reading my candles, I'm analyzing the trend. And all the other questions aren't really related to support resistance, so just gonna go ahead to AUD USD. We're 1 hour in, 1 hour and 5 minutes, and we've only done 2 pairs. So I don't think we're gonna get all the pairs done today. Sorry about that. Obviously this goes a whole lot faster when I'm doing it myself. I mean, I could throw support resistance areas up on all these charts in about 15 minutes myself. So don't think this is a slow process. This isn't a process that's going to take you, an hour or 30 minutes for each chart. It's just because we're doing it in a webinar format, so I'm describing everything, and it makes it go a whole lot longer. So Chris is saying do a pair at your own speed. What do you guys think? Do you think that's a good idea? Should I do a pair at my own speed? That way everyone can see how quickly I do it. Alright, cool. So I'm going to play support resistance areas on AUD USD. We're looking at an AUD USD 8-hour chart. Wait, one sec, let me change. Now I feel like this is a race. Like I have to get this done in 1 minute, otherwise I'm going to embarrass myself. This is not a race, but I'm going to get it done as quickly as I can. Keep in mind that I already have support resistance areas for AUD USD. These ones I already know are valid, these two, because I already have them on my chart. I removed them for the webinar, so I placed this. This one doesn't look that valid based on what you're seeing, but I know there's a support resistance area here, so I'm slightly cheating with that one there, to be fair. I'm moving that down because of that bounce there. Okay, we can see like a lot of body bounces through there. Pretty strong body bounce there. Strong body, that's confirmed in my mind. I mean, recent data more than backs this one up. Strong bounce from here today, in fact. Strong. Actually, no, we need to check this one. Sorry. Strong bounce there. Some body bounces through there. Body bounce there. This is really messy through here. Strong bounces here, though. This one's not perfect, but I'm going to confirm this one through forward testing. But it seems pretty accurate. It's messy through here, so I'm not 100% sure. But the other data supports this one quite well, so I'm gonna stick with this one. Bounce. Yeah, there's a bounce there today. I mean, that's. I want to see if there was a valid trade there, even on the 1 hour. Yeah, actually, you could have taken this as a trade on the 1 hour. I don't really trade the 1 hour that often, though, so I probably wouldn't have done it myself. But some people in the advanced course trade the 1 hour. That looks like it might have been a valid trade. But a lot of bounces through here. I mean, this one is definitely a support resistance area. This one's been confirmed mostly on recent data. This one should stand out and should be obvious why we're placing this one here. There was in fact a trade from this in the advanced course. I actually took this trade myself, this short here. So again, this is a support resistance area. I had a rough idea where this one was. So we got a strong preceding trend, we got indecision forming there. Got reversal trend. And this one is based solely on this bounce here. It's a very strong bounce, news-based bounce, so I'm not too sure about this one. Do see some bounces forming along there. That's not really valid because that was clearly news-based there. Now we're back in mid-2013. Honestly, it seems like this one would be better placed around about up here. Covers that bounce. And as you pull it forward, it covers that better. That's not really that significant, but it fits in better with that bounce. Stuff through there with these bounces here. Yeah, I'm gonna place this one here. Okay, so that's generally how quick I would place support resistance areas on a chart. Maybe even a bit faster because I was still talking a bit through it. So, it is a fast process. Obviously, you're not going to be able to place it that fast because, you're new to it. So it does take some time, but, it is much, much quicker than we've gone through today. It's just today it's been a bit slow because I'm answering questions and everything. Alan, isn't it easier if I zoom out? I mean, yeah, no. Everyone has their own way of placing support resistance. I honestly don't feel the need to zoom out. I like being zoomed in because when I'm zoomed in, I can get a really clear view of what's happening on the support resistance areas. But it's up to you how you want to place them. I like doing it this way. These are all pretty good support resistance areas for AUD USD. These are quite strong. Now, about these areas, just to give you guys an idea of the validity of these areas, I took a trade, like I said. I took a short trade here. Jumped in short. I didn't take the long trade here, but someone in the advanced course did. So, sellers came into here, indecision formed on top of this support area, and a trade was entered here, going long. I really like these kinds of reversal trades. I love it when I take a reversal trade. Now, like I said, I didn't take both of them, but one person in the advanced course took both these trades, the long and the short, or the short and the long even. I like these trades where you take the short trade and then the preceding trend for the long trade here is the reversal trend of the previous trade, if that makes sense. How do you spot that it's news-based? Francis is asking, how do I know it's a news-based movement? Just generally the size of the candle. You don't often get huge candles like this when the movement is based solely on normal price action. Usually large candles like these are news-based. This week, as you can see, the support resistance areas we placed have been mostly ignored. So you can see that here, most of the support resistance areas have been ignored. Now, this does not mean that these support resistance areas are not valid. Well, this one here hasn't been ignored, actually. This doesn't mean that these two support resistance areas aren't valid. This is just news-based movement. News came out and it's pushed price all the way down for AUD USD this week. AUD USD just crashed this week, news-based movement. This kind of stuff it happens. And, when you start to get news-based movement, what you're getting here is sellers are much, much, much stronger than buyers. So everyone is selling. There's not many buyers. So as price is falling and it encounters the buyers in this area, the sellers are way too strong and they push down to the next area. It encounters buyers here. And we can see that it's encountering buyers here because it stalls here. But sellers are too strong, so they continue to push down. Our next support area, they encounter buyers here. This time the buyers take control of price and they push price up. Yeah, near the trade balance was hugely negative. The AUD trade balance report. Um, it was actually quite surprising. Uh, Andrea, why no support line at 94.15? 94.15. Here. Is that what you mean, Andrea? James, are the larger candles driven more by institutions? They're news-based movements, so it's not necessarily institutions. It's everyone selling. All right, fair enough, Andrea. Yeah, you're probably looking at different open time on your charts. I'm assuming GMT open or New York open. These are GMT plus 2 open. Chris, if you had a buy stop at 94.40 without a stop loss, you'd have been screwed. Here, 94.40. Yeah, it was kind of crazy this week. I wasn't expecting much trading this week, to be honest, because NFP week, markets tend to slow down on NFP week. So I wasn't really expecting that much this week because Thursday tends to be my main trading day, Wednesday and Thursday. And with the slowdown you get on NFP week, Wednesday can be a good day, but Thursday, because it's the day before NFP, tends to be a pretty slow day. But because of Independence Day on Friday in the US, NFP has been moved from Friday to Thursday, which was today, which kind of meant that the whole week was just I wasn't expecting anything because I was expecting my main trading days, Wednesday and Thursday, to both be horrible trading days, and they kind of were. I mean, a lot of people will say, "Oh wow, I wish I jumped in short here on AUD USD and rode it all the way down," but it's news-based movement. It is so risky to trade news-based movement like this unless you have a very thorough understanding of fundamentals. And usually with this kind of movement, you're looking at trading it on daily charts, even weekly charts. You know, generally speaking, you don't trade fundamentals on 8-hour charts or the smaller time frames. It's more a long-term thing. This kind of movement is pretty unpredictable, and generally speaking, you can't really trade it. Now, you've probably heard a few people say, "Oh, I jumped in short and I made all these pips," but a lot of that is luck-based because the news came out in their favor. News could have easily came out against them and pushed up. So, these kinds of movements, they they're hard to trade, and they can screw up an entire trading week. For me, certainly, I've not been able to take any trades this week. I wasn't expecting to because of the NFP report, but all this stuff, all these unexpected releases coming out with surprising numbers have made it hard for me to trade. I'm too cautious of a trader to jump in based on news. Chris, yes, I do set my first target halfway between two support resistance areas. So on this short here that I took, so like I said, I took this short here, had strong bullish preceding trend, we had indecision forming on resistance, and we had a nice strong reversal trend. I can't remember precisely where my target was, but I think it was around about here. I think my first target was around about here. I placed my first target around here because there was some clear signs of minor support resistance around that area. So that made me think that a price was going to struggle around here, which it did in fact struggle around here. When price hit here, it reversed before my target was taken out. But I think that's how it happened anyway. It kept moving back down anyway, and was able to hit full target on this trade. So first target is generally in the middle here, and second target is generally around about here before it reaches the next support area, but just before. Bob, good question. When news reverses a strong trend, actually no. Sorry, I thought you were asking something different. There's so many factors involved in that, Bob. I can't really give you a specific answer to that. There's just too many factors. It's a really broad question. But anyway, let's move on. Let's take a quick look at AUDJPY, guys. I want to place some support resistance areas on this pair. God, my drawing tools aren't working. One sec. Okay. Okay, cool. So first one, I'm just going to place it here because of this bounce. This might not be a valid support resistance area, but we'll confirm it. I'm tempted to place one here too. I'm not too sure about that. This was news-based and so was this. So I'm not too sure about these two. We'll have to confirm these ones, but this one is not news-based. We can see clearly price bouncing along here, comes down, comes back up, bounces along there, on its way up here. It got stuck there for a while. We can see price bounce from here, bounce from there. So, this looks like a pretty strong one. I'm pretty confident this is a support resistance area, just based on the recent data. Gonna throw one around about here because of these bounces here. Bounce there, bounce there, there. This one's a bit lower, but this one is quite strong. So yeah, this one again is a pretty strong one, pretty obvious one. We don't have much data to go on here, so let's pull this back a bit. And tempted to place one there for that stuff, but that's really not enough to go. Oh, okay. Now we do have a lot to go on. A lot of bounces through there, just a lot of stuff through there saying that this is support resistance. Pull it back a bit more. We'll do that later. We'll do the pulling back later. We'll just throw them up now. Yeah, I'd say we got enough for now. Alright, so let's confirm this one. Let's see if this is in fact a support resistance area, because again, this was caused by the news this week. We do have strong bounce there. Don't really have much data to go on. Alright, we do have a strong bounce there. When was this? This was back February 2013. AUDJPY was moving a lot more back then. So I don't want to go back that far, because for those of you who joined late, we don't go back too far because volatility has changed dramatically recently in Forex. Forex is at all-time, well, not all-time, sorry, 2005, 2006 lows in volatility. So it's harder to play support resistance areas because we can't go back to 2010 to confirm them, because price was moving so much more in 2010. So that's why I'm not going back too far. We're placing them based mostly on recent data. This one looks okay, but we're going to need to confirm this one with some forward testing. So I'm just going to throw it up now, but this one may change as price moves into this area in future. So we'll keep an eye on that. This one has a lot of recent data. This one here, the 95, so let's just call it the 96.00. It has a lot of recent data. Strong bounce there, price stalled through here, formed along there. Yeah, this one we can confirm. I mean, based solely on the recent data, the fact that the recent data is so strong, and you pull it back just a bit further and you start seeing strong bounces, we can confirm this as a good support resistance area for AUDJPY. Okay. Next one, again, very strong recent data. Even today, there was a strong bounce there. Would this have been a valid trade? Probably not. But regardless, lots of strong bounces. Let's pull it back just a bit. Got a bounce there. Bounce there. Huge bounce there. Yeah, this one, based on recent data, again, it looks quite strong, so I'm going to confirm it as a support resistance area. So you can see that the process is really not that hard. Placing support resistance areas really isn't that hard. This one had a lot of recent data here. Kind of already confirmed this one at the bottom here. Stuff through there, some bounces there, but pretty strong bounce there. But yeah, this is back into early 2013, so it's over a year ago. I'm not too concerned with that data. The recent data looks quite strong for it, especially through here, so I will confirm this one. And there you go, we have some AUDJPY support resistance areas. I cannot think of any trades I've taken on AUDJPY recently, to be honest. I think, and please don't quote me here, but I think some advanced course members took this trade here. I didn't take this one. So price came down into the support area, reversal here. So that even if this trade wasn't taken, it's clear that there was a trade there. So that shows that this line is in fact valid. There have been trades forming on this support resistance area recently. Is anyone taking the long trade at 96.10? Ah, here. No. Here. Ah, is this a valid setup? Okay, good question. Is this a valid setup? I'm just going to look at all the time frames first. Yes and no. I don't really want to talk about the strategy. Alright, it wasn't valid on the 4 hour. On the 6 hour, it looks like it could have been a valid setup. It just depends on how you would have. Okay, the reason it depends is because the entry would have been up here at the high of indecision, 96.08. Stop loss would have had to be all the way down here, which would have been a 25 pip stop loss. your first target is going to have to be somewhere around here. So your stop loss is going to be bigger than your first target. Your first target is going to be what, 13 pips? Because you're going to want to have a first target around about this area. So the risk reward ratio for your first target is pretty bad. So that would probably be a reason not to enter. But let's imagine that this was a valid setup, because some people may still enter this setup. Some people using my strategy, they may still enter this setup because instead of placing their stop loss at the bottom of the indecision candle, they would just place their stop loss somewhere like here, 15 pip stop loss, and then 20 pip first target or something like that. So this could have been valid using my strategy, and if this trade was taken, obviously it would have been a loss. But the other thing about this trade is most people using my strategy, they know to be very, very careful around news. And that news would have reversed this setup. So, this is, I didn't want to talk about my strategy in detail. I just wanted to play support resistance, but it seems like everyone wants to talk about it, so we may as well just talk about it. Let me bring up a Forex factory calendar and show you what I mean. Okay, this was... Well, I just want to quickly confirm what news report this was that caused this huge move down. All right, this was RBA Governor Stevens speaking. So most people trading my strategy, they know that when you have reports like this, speeches are bad and stuff like that, that you need to be very careful. You need to tighten your stop losses. So this was, in a way, a valid trade if you were willing to accept the bad risk reward ratio. If you were willing to tighten your stop loss because of the bad risk reward ratio, if you were willing to put your stop loss down here, then yeah, you could have entered this trade based on my strategy. It wouldn't have been a particularly good setup because, like I said, risk reward would have been horrible. But before that news came out, you would have tightened your stop loss, and you would have tightened your stop loss in anticipation of news because it's a speech, and speeches are particularly dangerous when you're looking at news because with speeches, anything can be said. If someone says the wrong thing, it can cause a huge impact on price. So, speeches, they're quite dangerous. And generally, I advise people to either stay out of trades when there's a speech, especially from a central bank leader for that country. Either stay out of a trade, or if you're in a trade and you're already committed to that trade, it's already in profit, just tighten your stop loss, pull your stop loss up to break even if you can manage it. Or if you can't manage a break-even stop loss, then minus 10 pips or something like that, just so you could make sure that you're not going to lose big if that news comes out against you, which is what would have happened here. Paul. Yeah, on the advanced course, I have a checklist for people. You have to tick things off before you enter a trade. Well, you don't have to. You can use it if you want, or you could ignore it if you want. But one of the things on the checklist that I always recommend people do is before you enter a trade, because you're trading the 8-hour charts. You do have a long time to plan your trade. There's no sense of having to rush when you're trading 8-hour charts, 6-hour charts. It's not like the 5-minute charts that if you wait 1 minute, the trade could be over. You have a long time to prepare this trade. So, I generally have a preparation process for when I take a trade. And one of those things is to check if there's any high impact news that could affect the trade. So, that's why when you ask me, Was this a valid trade? I can't just say straight out, yeah, it was a valid trade, or no, it wasn't a valid trade. There's a lot of different factors. You know, if you have someone who knows what they're doing, like me, for example, or someone who's been in the advanced course for a while, this would not have been a valid trade because they would have gone down the checklist, probably gone down the checklist in their head, because I don't actually have a checklist anymore that I tick off. I just do it in my head. And you would know that there's going to be high impact news coming up. And when you factor that in with the bad risk reward ratio on this trade, so on the checklist, you would say, okay, good risk reward ratio? No, not good risk reward ratio. I have to set a pretty tight stop loss to make this trade viable. Then you see news coming up that's going to have a huge impact on this trade. So, that's already two things that are like, maybe I shouldn't take this trade. And, when you get things like that stacking up, then it is best to stay away from the trade. Fair enough. It's a pretty basic checklist. I can email you the checklist if you want. Um, but you can figure it out for yourself. It's pretty straightforward. News, risk reward ratio, who's in control of price. But anyway, let's move on. We're getting so off track with this webinar. But this is how most of my webinars end up. You have like those um, professional internet marketers doing Forex webinars, and they hide the chat so no one can see the chat, and they only cherry pick the questions they want to answer. That way they don't have to answer any hard questions and stuff like that. And I mean, that is in some ways a good format for a webinar because you don't get off track. You can ignore all the questions. The way I do webinars, we tend to get way off track because I end up answering questions that I know I shouldn't be answering because it's not part of the subject of the webinar. But I do feel that you guys have hopefully got a pretty decent understanding of how I do support resistance. I mean, we did go through 4 pairs. We still have some time. I mean, we could quickly go through Euro CAD, but I doubt we're going to get AUD CAD done, to be fair. But yeah, we'll quickly place some support resistance areas on Euro CAD. Wait up a second. Okay. Please, I need to. Yeah, this is going to be recorded. I told you, for everyone who was here at the start, I said most common questions I get asked on my website is this webinar going to be recorded? We've been asked that question how many times now? It is going to be recorded. It is going to be recorded. All my webinars are recorded. They're posted to YouTube. In the last 2 months, I've posted let's say the last 3 months to be safe. 4.5, 5, 6 hours of webinars. This is going to make 8 hours of webinars in the last 2 or 3 months. So yeah, they are recorded. They're all there for viewing. If you have 8 hours, check them out. I'll give you links to webinars. Chris, are some pairs better for support resistance than others? That is a good question. Generally speaking, it's easy to place support resistance on all pairs, but there are a few pairs that are quite difficult for support resistance. AUD New Zealand is one that even I have trouble with finding good support resistance. That pair I really, really dislike for support resistance. It's just such a messy pair. Euro JPY recently has been a little tricky, so has GBP JPY. Some pairs are trickier than others for support resistance, but if you try hard enough, you can place support resistance on the pairs. Kate, I don't trade indices, but this is price action. Support resistance, it's price action. Candlestick analysis, it's price action. So all of this stuff is going to work on any market. Um, Commodities, this stuff works. Futures, it works. It works in any market. It doesn't really matter. But I don't really teach how to trade other markets. I've tried a bit of futures trading actually recently over the past year or two. I've messed around with futures, and I do enjoy futures, but I don't think I could ever move away from Forex trading unless I was forced to. Um, Forex trading is, I don't know, I'm not going to say it's the best market to trade, but it's the best market to trade for me because I've become used to it and I like how it works. It's easy for me. Going into another market, especially with open and close times, which I really dislike, daily, they close, and open every day. It doesn't feel the same to me. Uh, but anyway, let's just quickly play some support resistance on EuroCAD. I really want to get through at least 5 pairs. So let's just power through this one, and then we can ask all the off-subject questions we want. Okay, what I'm gonna do. Actually, EuroCAD is one of the tricky pairs. It's tricky, particularly now in particular because of. Oh, actually, we only have 20 minutes left. Uh, yeah, guys, we only have 20 minutes left. This webinar's been running for an hour and 40 minutes. I would love to do EuroCAD also, but I do kind of want to open up for questions. So if we do EuroCAD, we're not going to have much questions and answers time. Usually we do 30 minutes of questions and answers, and now we're down to about 18 minutes. So I am thinking we skip EuroCAD. I could I could probably do EuroCAD. All right, people want me to just do it at my own speed. Hmm. All right, screw it. Let's just do it. I'll do it at my own speed. I'm not going to talk during this one. This one is going to be trickier because there's going to be a lot of movement back and forth of uh, because of how steep it's been moving down. So we don't really have much data in the last month because it's been moving down quite steeply. So I'm not sure if you guys are going to be able to follow what's going on because I'm going to be flicking back and forward, and I know there's a bit of lag for you guys watching. It's not really smooth movement. So yeah, it might be a little slow for you guys, but okay. You see some bounces through there, strong bounce there. Yeah, this one's pretty tricky. We don't really have that much data to go on here. Some strong bounces here, but this is all the way back in 2010. Oh, look at that bounce. Wow. This one was valid way back in 2010, and it's still valid now, so I'm going to keep this one up. Looks like a good support resistance area. If anyone's wondering why I'm silent right now, it's because people have asked me to place support resistance areas on EuroCAD quickly. So I'm just speeding through it. Okay. Even back in 2010, this was valid, so let's stick with this one. This one's quite obvious based solely on recent data, but go back and confirm it a bit anyway. Bounces through there, kind of bounce here. This one's good. Again, this one's got a little bit of recent data, but we can see price clearly forming along here, so that's good. This one I placed based solely on that bounce. We haven't got much data for that last one. That one's one that's going to have to be confirmed with future testing. So there you go, support resistance for EuroCAD. Um, 144.40 is strong support. Yeah, I got it 144.30. It's the same thing essentially. Andrea, 145.40 is the strongest. This one here. Yeah, that is quite strong. It's quite strong based on recent data. We got a pretty strong bounce, and then it kind of bounced again, but it came through it. So, you know, I'm not really that impressed by that bounce, but when you pull the chart back a bit, when you go back to, when was this? To the end of 2013, December 2013, volatility was low in December 2013. It wasn't as low as it is now, but it was still quite low. So these are all, you know, this is all pretty good data right now, December 2013. You know, you see some nice strong bounces through there. You know, this is all good data, and it's all showing us that this 145.40 is a pretty strong support resistance area. Yeah. But you know, you see, guys, like it is quite quick to place these support resistance areas. This in particular is a tricky pair to place support resistance areas on, because it's been moving steeply down, which you see on the daily chart. So this one is a little bit tough, but you can see I placed them pretty quickly. So placing support resistance areas is quick. You can get like 10 or 20 pairs done in, let's say 1 or 2 hours. 10 pairs per hour, 6 minutes per pair, is easily possible. So, you know, it was a bit of a slow process. We've only done 1, 2, 3, 4, 5 in 2 hours, but it is faster when you're doing it yourself. It only seems like a slow process because of all the chatting going on in the webinar. Mike, to be honest, I don't use this anymore. I don't use our Parry MT5 anymore. This is just a demo account. I'm using MT5 today because I haven't got my e-signal fully set up yet. Because today hasn't been that, this week hasn't been that great a trading week. I've been lazy with setting up my e-signal, but I have now switched my trading to switch my charting to e-signal anyway. Okay, no charts are there. So yeah, I don't really use MT5 anymore. So, all right, yeah, the point I was trying to make was the cool thing about e-signal. Wait, let me get a pair that everyone probably has open on their charting platform right now. Let me bring up Euro USD. The awesome thing about e-signal for me is that you can change the time template. So right now I've got it set to 0000, but I could change the open time to, let's say, just some random time 6, and then it closes at 6:2, and then the candles are going to look slightly different. So I guess the answer to your question is I don't really have a I don't really use a particular open time. I just change it a lot. One of the main reasons I'm using eSignal is because a lot of members in the advanced course have different candle open times. Some people are using our Parry, so they have GMT +2, which is what our Parry is set at. Some people are using New York open, some people are using just flat GMT open, and some people are using Aussie times because they have an Aussie broker. So there's a lot of different candle open times floating around, and one of the big draws to eSignal was so when an advanced course member asked me, "Hey Nick, can you check out this trade for me?" Then I can change the open and close times of my candles, so I can see exactly what they're seeing on their chart to make it easier. So yeah, in essence, my charts are going to be a different open and close time uh, when I need that particular open and close time. High time frame is measure. Yeah, Stephen. I hold down control and then you could make multiple copies of lines, as you see. A trade manager EA. Trade manager in what sense? Oh, okay. I can't remember the name of it. I don't use MT4. I'm not a fan of MT4, and to be fair, I'm not a fan of MT5 either. I really don't like MetaTrader. I never have liked MetaTrader. I mean, MT5, I was drawn to it because it had different time frames, like the 8-hour and the 12-hour, but when I realized there's so many other options for charting that have a wide variety of time frames, I went for it. I'm not a fan of MetaTrader. So, the overall answer to your question is I really don't know because I've never needed it. I don't use MetaTrader. Yeah, FX Energy is actually pretty good to come to think of it. Uh, I've checked that out because an advanced course member, there was a discussion in the forum a while ago about splitting your targets. FX Synergy. Mark, do you know of any other ones? Because there was more discussed in the forum. Thanks, Mark. Andrea, how near to a support resistance area do I want a indecision candle to be? Generally speaking, indecision candles are much stronger if they form in the center of a support resistance area. So, when you're looking to trade a reversal, you want your indecision candle to form as close to the center of the support resistance area as possible, because generally that's going to give you the best risk reward ratio. So, and also, okay, so let's use this trade I took as an example. So I took this trade here. It didn't work out as I wanted it. It was still profitable, but it didn't give me the target I wanted. But regardless, it is a good setup overall. So you have a nice strong preceding trend. You have indecision forming here. Now this indecision candle formed right on the center of the support resistance area. So from that aspect, it was good. It wasn't a perfect looking indecision candle, but where it formed was good. The risk reward ratio was also good because it formed in the center. If this candle formed all the way down here, then the risk reward ratio wouldn't have been as good because you could only enter around about up here. So your entry would be up here, your stop loss would have to be here, and that's going to be a pretty large stop loss. You're going to have a hard time with that risk reward ratio. If your candle forms all the way, I need my drawing tools again. If your candle forms all the way up here, like the AUD-JPY trade we were looking at before, then that's going to give you a bad risk reward ratio too, because your entry is going to be up here, stop loss is going to be down here, so bad risk reward ratio. The closer to the center of the support area it forms, the better. Generally, you want it to form right on the center. This was a decent setup because it formed on the center, which meant the entry was up here. And, when you jump in long for a reversal, so when you get into a reversal, when you buy because you're expecting a bullish reversal, what you're expecting is buyers to take control of price. So there are buyers in this support area. You've marked the support area because you've seen, by looking back on your charts, that there are buyers grouped in this area. So you want to get in when the buyers are at their strongest. And the buyers are at their strongest when they're down on top of the support area. Buyers are at their strongest here. Buyers are not at their strongest up here. Buyers are not at their strongest down here. Buyers are at their strongest on top of the support area. So the closer to this support area you get in, the better chance you're going to have of hitting your target, because the closer to the support area you get in, the more chance that buyers are going to be still strong and they're going to be able to push up enough to hit your first target. So for this particular trade, as I said earlier, it didn't work out as well as I'd wanted. I wanted this trade to push all the way up to here, but it just didn't happen. It didn't work out for me. I was still able to close out with profit because my first target was here. So in this case, I got a good entry, which was around about here, my entry. And actually, I think it was a bit lower. I think it was about here, but it doesn't matter. Point is, I got in when buyers were strongest. So I got in when buyers were strongest, and they were able to provide me with the, I think, 30 pips I wanted for this trade, because they were quite strong. Had I got in up here when buyers weren't as strong, there's no way the buyers would be able to provide me with 30 pips. 30 pips would have been all the way up here. I wouldn't have got those 30 pips and I would have lost out. That is a bit of a long answer to your question, but yeah, hopefully that answers your question. If you took this trade, what did you ever do when you see the next candle that closed not so high? You put a manual stop. Oh, this candle here, because it fell back down. I wasn't too worried. I mean, yeah, it is worrying. Like, So I jump in here roughly the 144.57, and it pushed up to here, didn't quite hit my target, came back down to here. That is slightly worrying, but overall, that's going to happen in your trades. It's not like buyers are going to take control of price and just push straight up 500 pips. Buyers are going to push up, they're going to come back down, push up, come back down. Um, you know, I wasn't too worried about that. If you start staring at your trade and freaking out every time it comes back on you a bit, you're just going to jump out of every trade way too early. JT, no, that's definitely not what I'm saying. I'm saying a setup is at its strongest when it forms on the center of your support resistance area. If it forms away from the center of your support resistance area, then you have to look at the risk reward ratio if it's still a valid setup. If the risk reward ratio is good, if you can have a secure stop loss that is tighter than your first target, smaller than your first target, then you could take the trade anyway. But if the support resistance area, if the candle is not in the center of support resistance, and that makes the risk reward ratio worse than 1-to-1 for your first target, then it's not worth it. Mito, you've been doing your own support resistance areas. Is there a way to practice? Not really. I mean, you can compare them to mine. You could. I mean, I guess you could just add me to Skype and you could send me your support resistance areas and I'll check them out and I'll give you some pointers. That's my Skype name. It's the easiest way to get in contact with me. Just send me a message on Skype and I'll get back to you. But for anyone who does add me on Skype, please don't expect me to respond very much in the coming days. I'm going to be going away on a short holiday to watch the Tour de France because it's in the UK this year. So I won't be very responsive on Skype. So if I don't respond, please don't take it as rude. Just know that I'm away, and I'll try to respond when I can, though. Wayne, that is advanced course only stuff. So if you have questions about that, please ask in the forum. No problem, man. It's my fault. I should have specified that somewhere. Forex Tester is a good software, better if you pay monthly to import your desired broker's data. Yeah, Forex Tester is actually pretty good. I have a copy of Forex Tester. I haven't used it in a while, but I have messed around with it for a few months, and Forex Tester is quite good for testing. No, I don't. Near is asking in an indecision. In a support resistance area, do you find that it's useful to open two opposite pending orders to catch the reversal or the continuation? I don't trade continuations. Support resistance areas, for example, let's say there was this support resistance area here, or an even better example, this one here. So you were trading a short here. Wait, is this the trade I took? All right, yeah, I took this trade. Okay. So let's say you set up a pending order here. Damn it. I hate it when the lines do that. Say you set up a pending order here and one here. You would have got triggered into this one to go into a continuation trade, and it wouldn't have continued. Obviously, it would have been a reversal. I don't trade continuations, especially now. The market doesn't have enough volatility for continuation trades. It just doesn't. Price doesn't tend to move that far in one direction before turning around. Anyway, guys, I think I'm going to call an end to this webinar. We've been going for 2 hours and 7 minutes now. This is the longest webinar I've ever done. Feel free to add me to Skype if you guys have any questions. I'm happy to help you out on Skype. But like I said, tomorrow I am leaving, so I won't be very responsive on Skype. But please do add me to Skype if you have any questions. I'll be able to help you out there. But other than that, guys, I'll catch you around the site, and I'll be posting a recording to this video tomorrow. So if you guys want to review the stuff, hopefully you enjoyed this webinar. Hopefully it was good. I'll see you guys around the site.